Good morning, SMF MMTs. It's February 1, 2010. What I would like everyone to know, when we started the month of January, that's this January bar right here. It's a monthly bar. And now we're starting, January is so goes January, and there's all these myths and beliefs about that, MMTs. The thing about it is that this particular January was probably we haven't had a good January on record. I think the last one, kind of like this month, was back in 1997. The thing about it is it's the beginning of February. February 1. We're going to start a brand new monthly bar. And what we're going to focus on, this is a standard chart. We'll use our platform that will give us the, even though we're still overbought, when we went into January, we went into what we call a crowded trade. And the crowded trade was the fact that everybody was getting in. Obama did this, Obama did that. That changed the bull sentiment. And the trade of where we were and the time of being oversold and overbought conditions work both ways. So we're still in an overbought situation at 86.5% DSs. Percent DS is what the public looks at. And what happens is when you get too overbought in the public sector, people are looking for a reason to take profits. 2007 tops, going into the big horrific downside, we came right up here and tested that top right here. Let's take a look at it. Here it is. 2007 top before the financial crisis in 2008. This monthly sell side of that long monthly wick is where people were taking profits, because the thing of it is they don't believe that the market can go higher. Well, it can go higher only for one reason: taking money off the sidelines, staying overbought for an extended period of time, staying complacent, lack of fear for a period of time. We have said in many previous broadcasts to our network is that these things can happen, and that the shorter term trade for pullbacks is what you want to do. Then you want to measure that bull. And we have a lot of gap ups this morning. When we look at the gap up list over here, is that we're going to see how many of the fund managers want to go humpity hump, humpity hump. And the humpity hump is I got Baidu up 9.24. I got a $4.50 gap on my Google. I've got Priceline gapping up. I've got the bull finally catching a gap. It's been making record highs. There was some short-term trades buying the bear long and shorting the bull for profits on that intraday level. So when we look at the gap up list, we're looking at how new people are looking for deals. And where am I going to put money to work? And what the market is trying to feed off of is that the bond market has a lot to do with things. The whole cycle has a lot to do with things where, okay, where am I going to put my money right now? And outside of the U.S., emerging markets have got problems around the world. We already know. The thing about it is attracting that offshore money back in to the U.S. equity market. And we have said this months ago. Now, this is not new analysis for the seniors. For the new people in the school, it is. So, having said that, and having going back several months and calling the exact kind of frames that we're looking at, is we're looking for the bull today to step up and take out. Today's date is 2/1 of 2011, is last Friday selling. We only got a third of that back yesterday with the contagion fears. And what we're looking for on the first couple of days of the month is where that money may get allocated into that U.S. equity market, and where people start looking for, it's a stock pickers market. Now, where they start looking for deals. But we can't forget that a lot of the moves in the market have already been priced to perfection. We're in the third major week of earnings season right now. We're going to be winding down the earnings season after this week, and then just the stragglers will come in. We're going to have a report card to give We're going to have a report card to give on the S&P 500 earnings, and we're going to do our analysis there fundamentally. Then we're going to take a look at the tech, and then we're going to take a look at the various sectors to those earnings. We're going to take a look at where the global growth picture would be slowing, and that the U.S. picture would start growing. And the thing about it is, you know, the unemployment situation, we got major numbers coming out Friday. And the thing about it is, there's a lot that goes into that we're not going to talk about that. We'll do that in an economic section, and we'll do a special there. However, we're looking for where money wants to get a home, because that equities, as we said, that if we could turn that tide and we get back, as all the fund managers in their textbook analysis are going to say, well, the S&P is at about 13, 14 times next year's earnings. Or the NASDAQ comp in the tech sector, when we look at the PE ratios, they're this and they're that. That's okay. So, hey, that's their belief, but it's got to show up here. It's got to show up in the tape. Now, having said that, this is the gap up list. Today, when we look for gap open down list, we can take a look that we have a very narrow gap open down list compared to some of the days of the selling that we've experienced in January. But all in all, January is one of the best Januaries I've seen since '97. And basically, when we take a look at the U.S. indices today, we're going to really stay focused on these Dow Transport, which we have gap ups today. And we're going to be looking at the NASDAQ transports. We're going to be looking at, once again, in order to break through those old highs, it's going to take something out of here. It's going to take something out of the S&P banking here. And when is this thing going to get back on fire? Because that's going to be one of the keys. The key BW Bank in Philadelphia thing here, we need to see the performance coming out of some of the different types of financials that we have in our system, because we do, to be able to take the markets higher. And as we go through some of the S&P mid-cap, again, they had a little bit, we got some good gaps here in the mid-cap. We got some, and that's in the mid-cap 400. We got some fairly decent gaps in all green first day of the month in this S&P small cap 600. There is some leadership in here that we like. And basically what we're going to be looking for is money rotation. And here's the S&P 500. And this is all pre-market. Okay, and you can see the S&P 500 got Google in there, got Priceline in there. FCX we love. We got MCX, we got CMI, they reported earnings today. Cummins, I sent them out in the emails. Apple's got a gap, Novellus has got a gap, Semiconductor. So we're getting some gaps here in the S&P 500 starting February 1 of 2011. And when we take a look at the top S&P 100 stocks, top 100 market cap, we got Google leading the way. And I still feel that the stock has been manipulated and is down, has a lot of upside. Because we're going to see if the fund managers want to come in. We got JP Morgan, but look at the tape is all green. So it's good to have this on live video, because what we're going to monitor is U.S. fund equity managers participating in the overbought tape that could, and where the bears have got to be extremely careful now, because if they're not, it's a professional traders market now. It's a floor traders market for MMTs. And then, you know, you got institutional hedge fund managers. They call themselves a professional public community, that is. And the public is the public. We actually make our money on all of them. So we're going to take a look today at where some of the retail, we got gaps across the board. And that's how we're starting pre-market today. And that's how we're starting February 1 of 2011. It's very careful, once again, for us to be very mindful of the NYSE. Old economy type stocks are there, as we understand, for many years. But what we're going to be looking at is for the gap open up on the NYSE. And we've got a lot of good stocks that we make markets on here. And you got Potash, you got some leaders in there, CEO is up. So you can see where the artificial price gap in pre-market before the opening bell in 29 minutes. You can see the magnitude of that NYSE right here. And a lot of fund managers are looking for deals and looking for different sectors that are in this whole environment. And they have good moves. You got BHP, Hilton up in here. So you got some of the bigger ones. You got FedEx, you got FCX, you got MCK, VRX, Cummings today. They did well. They're all on the NYSE. So we're going to be monitoring February 1 of where capital is going to get committed to. The thing that we want to see moving forward, once again, is that we take out the old highs, but we need some key sectors. We need the financials to lead the way. We also need to see that the bleep in the transports in the U.S., that's your truckers, and then again your shippers around the world in that dry Baltic index, is, you know, what kind of supply and demands in the oil patch may happen because of the Middle East crisis that's going on, and finding out where this money is wanting to commit itself. And one of the things that we need to see in the broader market is where equities are closing up at the highs of the day. Instead of equities going up and just sliding the bid nicely for us to make money on the short side, and then they come back up, but then it's all about that closing bell on the leadership equities. The leadership equities need to close up toward the highs, okay? And you know, they're going to have their ranges. The public is going to show up in the tape, and that's what we're here to do, is really monitor and look at that. But nonetheless, we need to see some of the key equities that we feel that have deals that that they start closing up toward their highs. So we've got a complete video today on February 1, and we're going to be taking a look at various different sectors around the horn today. And we have 29 minutes. I'm going to have the MMTs get ready. And that will conclude February 1 pre-market analysis for February.